Truthfully, banks are skeptical of crypto companies, and it's a lot of just the uncertainty in the regulatory environment. What's interesting is once, you know, the banks meet us, get to know us, understand what we're doing, the conversations become pretty easy. It's a nonprofit crypto company is much different than a, I don't know, algorithmic trading margin loan type crypto company or some type of, I don't know, tornado cash type of thing.
Hey there, good people in crypto land. I'm Matt Lysing. Welcome back to my podcast, Decent People. Today on the show, I've got a really interesting guest. His name is Jeff Milewski. He is the Chief Executive Officer and co-founder of GlowDollar, which is a stablecoin, which in the crypto world is a coin that is meant to be pegged to a value like the US dollar. These are huge and very important in the crypto world, as I'm sure you're aware. One of the largest is Tether, that claims to have $80 billion of reserves that back the Tether cryptocurrency stablecoin. So GlowDollar is aiming to be a stablecoin as well, but what they're doing differently is with the money that they make on the interest that they can earn from the cash that they hold, they're going to be donating 100% of that to help eradicate extreme poverty. Jeff and his co-founders are hoping to scale to something to be in the billions of dollars so that a lot of money can go to folks in extreme poverty, and that's defined as making less than $2.15 a day. Jeff grew up in a small town in Iowa. His mom was an English teacher. His dad owned his own pharmacy. Jeff loved tech and economics from a young age, and after attending school at Crichton in Omaha, he went on to get a master's at the London School of Economics. He came back to teach at his alma mater, Crichton, where he started courses on DeFi around the 2017, 2018 era. And soon after got interested in GlowDollar, which I just described, and has been building that for many years. And they're hoping to launch here within maybe the next month or so. So it's a really interesting and positive story in crypto at a time when we're not getting a lot of those stories. And it is something that reminded me of why I got into this in the first place and why I took the leap into DeCent, because there are these opportunities and these projects that folks are working on to not only create a utility in the form of a stablecoin, but on top of that, as a secondary effect, to help people get out of extreme poverty around the world. There's something like 650 million people in the world today who live off of less than $2.15. It's a good, heartwarming story. With all of that out of the way, let's get to the conversation. I hope you enjoy it. Thanks a lot. Hey there, Jeff. How are you doing today?
I'm doing great. Thanks for having me.
Yeah, I'm excited to have you on. I have, to be honest, just recently learned about the project that you are co-founder of. It's called GlowDollar. Glow is short for global, so it's a global dollar idea. And what you guys are setting out to do is help as much as you can ease extreme poverty around the world. And you're doing that with a cryptocurrency stablecoin called Glow. I spoke to one of your co-founders, Jasper, last week, and we ran a story on DeCent about the project and some of the details. So I'm familiar with that, and we will definitely get into all those interesting details in due time. But I wanted to start off and just ask you where you're coming from and how you found your way into crypto and Web3.
Yeah, thanks. I appreciate that. We're building this very simple model. That's the GlowDollar. And it's a stable coin that generates interest that we donate for people in extreme poverty. And I just want to emphasize that because it kind of touches on my previous work before starting Glow. I was teaching at Creighton University. My background's in economics. I taught the traditional micro, macroeconomics, but also an international development course as well. And then I started a blockchain fintech program, and there's some coursework and MBA program there that's still going on. But I really like the idea of using blockchain and crypto in the development space. And I really think there's a scalable model with stablecoins to where if we grow the adoption, the impact of generating a return around the reserve, the collateral, could have a profound effect on helping solve extreme poverty. And there's some economics behind why I think basic income at the extreme poverty level is important. And it comes from my background in academia and just generally, I don't get into all the details, but I think giving people the chance to spend their own money and elevating their access to capital at that level is really impactful. So I do take a wonky approach to this and then tie in blockchain, and hopefully we can use that as a scalable platform to make a big difference.
Were you always wonky? I guess I wonder if, I wonder how a lot of people end up in academia. There's lots of different paths to that, but was that always something that was school and learning and studying and that sort of mastery of topics always something that you found easy in your life when you were a kid?
Yeah, definitely a curiosity. And I think one of my strengths is learning and like developing that curiosity with a lot of different subjects. I think economics is one of those broader study like fields of study where you think about a lot of different things and you get to explore different industries, technologies, how they have an effect on society. So yeah, it's definitely a lot of just curiosity and wanting to learn about a lot of different things. I have always had an interest in technology, especially around thinking about different companies, how they build technologies, the investment landscape, and kind of the impact of disruption and all those things too. Yeah, it's a lot of coming together and having that space to explore it, and teaching is a really valuable and worthwhile endeavor. But building something in the startup space and trying to tackle a huge problem like this is a continuous process of learning and tackling challenges. So it's a really good transition and gets me really excited.
Yeah, I'm with you 100% on that. I'm doing the same thing at DeCent with a startup in the media world, focusing on crypto. And it is not easy by any means. And there's always something new, something challenging, and something that you have to learn about to figure out as you're going along. I'm curious, were your parents teachers or academics, or did they plant that seed in you, or what was that environment like when you were growing up?
Yeah, good question. My mom was actually a high school teacher. She was mostly an English teacher. And then my dad was a pharmacist. He owned his own pharmacy. So the entrepreneur side of things and then the academic side. So I'm a blend of the two right now. I
Did
haven't
he have
really
a
thought about
soda
that, but
fountain
that's
by any chance?
oh no soda fountain. It
Uh,
wasn't that'd been really cool, but
Maybe a little too late for that.
probably.
Yeah. But and they okay, so your mom was a teacher, your dad was sort of had an entrepreneurial spirit. He was doing his own thing, but
Exactly.
yeah, so that's a nice blend. And you said you liked technology. Was that from an early age? Were you into computers as a kid, and did that sort of like grab hold of you through video games or anything like that?
Yeah, so definitely. I think when the I'm from small town Iowa, but we did get dial up internet and like pretty early in I think the mid 90s we got internet and I would build websites when I was 12 years old maybe and just learned to program back then. But a lot of it too was the bull market in the stock market. The different types of companies that were getting a lot of attention then really piqued my interest in learning more about finance and economics,
So we're
but
in like
always
the
paying
mid to
attention.
late 90s at that point.
Yeah, mid to late 90s when the internet was starting to become a thing. And then just the bull market really caught my attention. I remember it wasn't my money, but we had an early Ameritrade account and remember like buying Red Hat Linux or something like that. So yeah, just understanding more business model technology stuff while at the same time just exploring how to build websites and all those things was a pretty fun phase. On the video game side, definitely was big inspiration. I remember like modding PlayStations and doing all those kind of fun hacks. And yeah, that's a totally different world. But yeah, it was a fun time to develop those interests.
And were you building websites for fun on your own, or were you building them for anybody, like who were using them for a business purpose or a personal purpose?
Yeah, mostly personal. I think there was a couple of companies that I built websites for, like our pharmacy was one, but it wasn't like I was building a business out of it. This was a town of 5,000 people, so I didn't have a whole lot of
Yeah.
market to capture there. But yeah, it was just more of a hobby that turned into kind of my interest later on.
And it probably had that awesome like clip art vibe, and the graphics were like very blocky and whatnot.
Oh yeah, a lot of GIFs.
Yeah.
It was yeah, there was. I remember building like a little chess board in JavaScript that just had little images, and it wasn't too didn't look too modern, but it was pretty fun to build in.
Yeah. And people of a certain age will remember when, like, it's, oh, I'm sorry, your player has crashed.
Yes, very
Yeah.
frustrating.
Yeah.
But I remember this is MP3 worlds in the late 90s, and I'm like before even Napster was popular, trying to like download MP3s, and there was a program Hotline Client and Hotline Server on a Mac in the 90s that had MP3s before Napster became a thing. So that was a fun era as well.
Cool. Were you into
Yeah.
music at that point as well?
Yeah, not really. I don't think my music tastes back then were that sophisticated, but it was more free music on the internet was pretty fascinating.
Yeah. And then who would have known, I don't know what, 30 years later, that whole idea of a digital file connected to a blockchain would spawn the NFT world.
Exactly.
Yeah.
Yeah, it's pretty interesting.
And okay, so early on, what did you think you wanted to, how did you want to translate those interests you had into something bigger? Were you headed to college to become a professor, or what were you thinking going into that part of your life?
Yeah, it was more, I was interested in going in, economics was a fascinating field, but more about the finance, like financial economics. I was heavily um, influenced by Warren Buffett. I went to school in Omaha, had gone to the Berkshire Hathaway annual meetings
Yeah.
for a long time, and that investment space and talking about technology. Bill Gates is always at those events. I actually played bridge with Bill Gates once
Oh,
many
really?
years ago.
How'd you do?
Yes, not very good. I'm not a very good bridge player. I didn't know how to play that well, but he didn't get too frustrated.
Is he good?
Uh, yeah, he's good. He's pretty
Yeah.
intense.
Okay.
Yeah, but he's a nice guy as well. But yeah, so I was thinking more of the finance investing world in terms of approaching those subjects and learning about econ and finance and what were the main drivers of different economic phenomena. I didn't anticipate going into academia. It was more like I would go to Wall Street. I actually started interviewing for investment banks, and then the financial crisis hit. But after that, I actually bought a coffee shop and was an entrepreneur for a couple of years right after college before going to the London School of Economics to do my master's degree. Yeah, and I think the things that shaped me in terms of econ is I really like the development space, learning why do some countries develop institutions that lead to massive wealth? Why are some countries very poor still? What causes big inequalities in the world? What causes lots of growth? All those things are interesting questions. And yeah, I continued that more traditional training in London and really developed those interests even further.
Before we get to the 2008 crisis, I was curious how, if you were young or too young to learn any lessons from the .com crash and like all the technology companies that you said got you into this in the first place, did that leave a mark on you, or what was your thinking when all of that stuff went to zero?
Yeah, that's a good question. I don't have a whole lot of, I'm trying to think. The companies that I was paying attention to, I think there were name brand ones that were kind of robust enough to keep going through that kind of crash.
Like Red Hat and Linux, they made it obviously through.
They made it, but also just there's the Microsofts of the world, even like Amazon did well afterwards. I'm trying to think, I don't have any recollection of like specific things. It was more, I remember like doing quite a bit of research around China then, but that was more like macroeconomic shifts in the economy. I remember Baidu in like maybe 2005 or 2006 as the China Google that was just Google IPO'd in 2004. I remember that very clearly, and how coming from the tech crash just a few years later, how that kind of like re-energized people in the tech
That's
space. But
it's interesting, isn't it?
yeah,
Like the parallels between then and now. It's like the technology is what survived, of course, and the internet and the IPO boom and bust, right? Pets.com was too ahead of its time. Like it just, there wasn't a good business model there, but the underlying technology of the internet, of course, was there and it didn't go away. And I think we've seen that in a few cycles here with crypto as well. The technology is not going away.
so at the Berkshire Hathaway annual events, like for a few years, they're like everybody's like Buffett's missing out on the next wave of where all the profits are going to be in the stock market. And then he's, oh, I don't invest in things I don't understand. And after the crash, Berkshire did really well. The shift of assets to the safer type of companies like Berkshire Hathaway So that was always, what is valuation? And everything's kind of end of the day tied to some type of cash flow. And a lot of those tech companies didn't have the cash flow to justify the crazy valuation. So I think,
Yeah,
yeah, thinking about what is valuation, that was the biggest lesson probably.
yeah, for sure. Because he's such a famous value investor, right? He's also not going to buy at the top. He's going to find somebody or some company that he thinks is undervalued and but yet has a really good idea or a really good infrastructure in place. And then that's where he's been so successful over the decades.
Yep. And the idea of moat too, like what are the competitive advantages for a company and how persistent is that when the market changes? Definitely.
Yeah, yeah, for sure. Okay, and then so once you got into college and you started, did you dive into economics, and that was that an area with technology and stuff like that where you thought that was the mix that was appealing to you?
Yeah, I actually, there was a phase when I was exploring medical school as well. So I did take a lot of physical sciences. And I think a lot of I was always doing economics. I was just like, that's my major, that's my field I want to become an expert in. And then exploring what are other medical school is much different than econ, but
Yeah.
I come from a family that was in healthcare, so I thought it'd be an interesting combination. But one experience during that process of exploring those different topics was I did a trip down to Guatemala. It was a medical team from Stanford, actually. It wasn't part of my school, but I volunteered to go down there and spend a week helping out with their clinic down there and brought a whole bunch of medication from our pharmacy. And that kind of experience reinforced this idea of, oh, this is an interesting economic problem I'm dealing with and helping out. It doesn't have to be, you don't have to be a doctor to solve problems in developing countries. You can think like, what are the economic problems? How do you build policies and structures and institutions around increasing wealth? And that's going to lead to better benefits of health and just job opportunities and growth in those countries. So that was an interesting experience that kind of completes the story of like, where do I get to a career where I'm actually building tools to really influence people in those regions?
Yeah, and talk about a firsthand experience with answering the question you had earlier of like, why are some countries or systems built towards creating wealth and other systems don't? Like Guatemala compared to the United States or whatever. That must have been really interesting to be there and see that with your own eyes.
It was, yeah. And it reinforced I was like, okay, I want to dig into econ more, and especially on the development side. It's funny how different experiences shape where you end up going. So,
Yeah. Then you decide after college to keep going and you went to the London School of Economics for a master's degree.
correct. I do not have a PhD, just a master's degree. Yeah. So my academic career wasn't a tenured track. So I think that's one of the reasons why I was flexible to like wanting to join a startup. But
Okay.
yeah, I did specifically at LSE. My master's was it was called political economy, but it focused on developing countries and institutional economics. So institutions in terms of, what are the legal structures? What are the customs and kind of cultural aspects of society, and how does it lead to different growth type of environments?
And are we talking about like the World Bank there, the IMF, those sorts of institutions, or more like domestic institutions?
No, think of, yeah, the term institution, it's a broader term there. It's not like a World Bank type institution. It's the legal system is an institution. Some countries have a strong legal system, some have a weak legal system. You can analyze whether like corruption is a big part of a society, like the cultural institution of corruption could be an example there. There's ideas around trade policy or openness to entrepreneurship and regulation. Those are all kind of institutional questions.
I see. Okay.
Does that make sense? Like some are
Yeah.
informal institutions, some are formal institutions on the legal and regulatory side.
Okay. And then had Bitcoin come on the radar at this point by then, or when did you first come across cryptocurrency?
Yeah, that's a great question. So Bitcoin, I think I first found out about Bitcoin in 2011. This is going to make me regret some things. I
Okay.
had a
That's
friend
pretty early
who
though.
was, yeah, my friend he was writing for a online, it was like a tech, tech blog called Silicon Prairie News.
Okay.
And I was living in Omaha at the time, and there was a Des Moines company called Dwolla, and Dwolla was a payments company. You could do a transaction for 30 cents. This was started by Ben Milne back in 2009 or 2010. But Dwolla was being used for a lot of Bitcoin transactions because it was a cheap one-time fee. And my friend wrote an article about it, kind of explaining what Bitcoin is and how Dwolla is being used. And it was trading for, I don't know, maybe $10 at the time. But that's when I was first introduced to it. And I was intrigued by it, but I didn't actually jump into it and think it was the next big thing. But yeah, it's always been something I was thinking about. Oh man, that was the time to actually like could have had a big opportunity. But yeah, pretty early.
Jeff, you're in good company because pretty much everybody I've had on this podcast has a similar story to that,
Yep.
where they're kicking themselves for what they should have done back in that era. So you then returned to your alma mater and began teaching at Crichton.
Correct. Yep.
And okay, and what were you focusing on at that point in your teaching?
I was originally, so I was a research director of an institute there. And I also taught a couple like intro, micro, macro courses. So that was the beginning of teaching in that sense. I think I taught a finance course too early on. But then I went full time teaching and helped start a fintech program specifically in the College of Business. So that was, we started courses called like fintech strategy and then like some blockchain courses, basically a major that people could actually sign up for that's like fintech like specific. So for an undergraduate program, it was pretty innovative. And that's where I got a lot of like in-depth interest going into the crypto space and DeFi. And this was around 2017, 2018, building out these programs. So yeah, I did that for a few years, and then a couple summers ago started with Glow Dollar and getting those ideas launched.
Was there anything in that era, like the 2017, 2018 time period? There's a lot of innovation. Ethereum was now on the scene, and it was a lot more than just payments in the crypto world. But do you remember anything that really opened your mind to what peer-to-peer decentralized networks could be used for?
So 2017, 2018 was the ICO boom. And with kind of my background in finance, that was starting to become interesting in terms of seeing how companies raised money, what actually crypto could represent in terms of owning some type of application on the blockchain. It wasn't like a DeFi thing yet. But that was the speculative aspects to that was interesting to follow, but it wasn't something I was super passionate about. I think I got more interested in when I saw DeFi starting to take off, and like Uniswap was created post ICO and lingered a while until the DeFi summer of 2020. But yeah, there was enough interest to pay attention to it, explore the mining aspects of it. I really do thinking about the incentive structures of a lot of protocols. Just the idea of coin mining, like it's just a bunch of code, everybody voluntarily participates because it's encoded into the system is an incentive structure that gets people to commit resources to it. So all
Yeah.
those things are really intriguing to me and wanting to build out within a business school type of setting, how different business models are thought of.
Yeah, and the ICO phase has always been fascinating to me because it was the first time that crypto took a very traditional financial use case. In this case, how do you raise money for your startup or for your business? And they completely made it peer to peer, right? And decentralized
Mm-hmm.
it. There's no bank involved, there's no venture capital firm. Now you could go directly to people who might want to use your protocol in the future and say, hey, help me raise some money. This is what I want to build. And I've said this a million times, but of course there were a ton of scams. But that is a core function of finance, is that ability to raise money. And where do you go to get capital to fund your ideas, right? And so I've always thought that was really, I think that gets missed a little bit in when people just refer back to that period of time when, yeah, a ton of people lost money, but everybody had dollar signs in their eyes and money was loose and fast and things were going crazy. But it did, like we were saying before about the internet, that's a new technology that's now out of the bag. It's not going to go
Mm-hmm.
away. And so I've always thought that that's the innovation that you need to keep your eye on here if you're paying attention to this industry and what's important about it. And I think you can get lost in all the bad stuff, shenanigans that went along with it. But, and I'm curious, during all of this, and as you're getting more into DeFi and you're teaching about it and learning more about it, did you have a sort of altruistic undercurrent to any of your thinking? Or because with Glow Dollar, it's a very ambitious and a very really beneficial application of crypto. Was that something that you always had in the background in your life, or did that just come around to you with the Glow Dollar project in particular?
I think what was interesting, I met Sid Brandy 2 summers ago and he actually brought the idea of using crypto for good and basic income. And when I met him, I was like, oh, this seems like the perfect kind of intersection of my interests. I
So
like the
Sid was the founder of GitHub, right? Is it
GitLab. GitLab. So
GitLab? Yeah,
Sid
I'm
is
sorry.
he's the CEO of GitLab currently, and he's co-founder. Correct. Yep.
Yeah. Made a lot of money doing that and then wanted to try to figure out how he could start giving back.
Yeah. So Sid is very interested in scalable, like impactful technology, and yeah, he saw crypto as something that potentially could be used in that way, and giving back is a really important aspect of these ideas he has. So yeah, I was really excited to meet him and get to know him and understand, okay, yeah, I have some background in econ. I really liked the international development space, and then tying it to what I was recently doing in academia with the blockchain DeFi, kind of teaching those fintech courses. It was like the perfect intersection of exploring this space. And I get more excited about creating something that actually has like real value. And I think a lot of crypto is starting to really showcase its value. Um, I wasn't excited about trading and speculating in that space. I hardly traded in crypto. It's more like I see a protocol, I'll invest in crypto, but I'll forget about it for many years. And sometimes it goes away, sometimes it doesn't. But it's like I want to have some tangible value and help push the industry forward. So yeah, I wasn't looking for something altruistic. I think teaching, I get a lot of um, value from just the environment of teaching and learning. But yeah, I wasn't looking for a nonprofit to solve a problem. It was more like this is an interesting, scalable idea. It solves a huge problem in the world, which I like to think macroeconomic type of ideas. And I think it's just really exciting about if we're going to have this ecosystem and have stablecoins be a really important part of it, it should be a nonprofit issue, or it should be something people can really buy into on the mission side as well. So it's a really good combination of things.
Yeah. And before we get into Glow Dollar, what the current structure is, I think it's interesting and important. And I know you guys have moved on from this, but I think it's informative to talk about the idea you had at the beginning and to talk about how you realized that idea wasn't really going to work. And the reason it wasn't going to work, I think, is really instructive in letting people understand why crypto in this case is something that is a really interesting avenue for raising money for people in extreme poverty. So I'll just start you off. The original idea that you guys had was you wanted to give money to everyone in the world, and maybe I'll let you take it from there.
Yeah, that sounds pretty ambitious, but it was the original idea. And we were inspired by the WorldCoin ideas as well. They were started a couple of years ago. That's Sam Altman's. He funded early efforts with WorldCoin. But yeah, we were thinking, so in the bull market, there's obviously seeing all these asset values increase and the excitement around buying different types of cryptocurrencies. I think there was a path where you could have we were trying to do some type of seniorage model for we call it like a managed float coin, get it to a valuation and enough stability where people viewed it as a payment token, but it's supported by a reserve of funds that is managed and controlled by a nonprofit organization to basically like international reserve type trading in terms of how a government issues currencies and manages their currency valuations throughout the foreign exchange markets.
So you would
Very
have
ambitious
to have,
project.
yeah, you would have had to
Yeah,
create a currency that institutions and investors took seriously enough to buy into that currency so then it could compete with other fiat currencies like the dollar or the euro, right? That was the thinking.
correct. And to a certain extent, you think if I like to use Dogecoin, like the interest in Dogecoin, like the value of Dogecoin was growing at like billions and billions of dollars. Um, and then if you actually controlled the supply and distributed it evenly, as the value of the entire ecosystem and network grows, you can share that value with people rather than having just early investors capture all the value. Does that make sense? Like instead of like early investors that buy Doge for fractions of a penny, then they get super rich because the network grows and people get interested in it. We were hoping to do something where we could share network growth and value as the currency overall would increase in value. But yeah, it would have to have enough trust and stability aside from that to be actually adopted for a useful payment.
Yeah, and that's really tricky, right? Because you're like the U.S. like U.S. institutions, banks, consumers, like that's a tough sell, right? It's just hey, here's this new currency, you should buy into it because we want to give everyone in the world a sort of basic income.
Exactly. It would have been a very hard, difficult project to actually grow and build that trust. I think the stablecoin model is, we already saw a really strong market there. And transitioning to that is, I expected pivoting around early ideas. And that's the economist in me and the theory type of ideas. It's all sound theory, but actually getting it in practice was really hard to execute on. So that actually building a stable coin with the market and people expecting the dollar to be worth the dollar is a much safer place to start.
The beauty of the stablecoin is it's got utility built into it, right? You can use it in the crypto market already that already exists. You could pair it with other coins like Ether or Bitcoin. You could use it for payments. There's already a bunch of many different stable coins out there like Tether, US dollar coin. And so that you don't have to you don't have to win people over. You don't have to create a competitor to the dollar. You can just create a stable coin in the crypto world that already has a very understood use. And if you can get it to scale, then all of a sudden there's an earning power there that you can then be using to help people in extreme poverty.
Exactly. Yep. It's basically there's inherent utility to a stablecoin. We see that with a very large market already. But I also think the potential for this to become a very widely used form of dollars is really high. So the optionality of potentially a new market, growing market, and us capturing a part of it is something I get excited about.
Yeah. And so okay, now to Glow Dollars specifically, um, just for listeners, the way that the stablecoin market works and how a stablecoin issuer makes money is, let's say I'm going to release Matt coin and it's going to be 1-to-1 with the US dollar. And so you'll send me $1,000 and I'll issue you 1,000 Matt coins. And then let's say I get $100 million like that, and I'm not going to just sit on that cash. What I'm going to do is I'm going to invest it so that I can earn some yield. And if I'm smart, I'll do it with almost risk-free instruments like very short-term US government debt, like treasury bonds that now are paying between 4 and 5% interest. So I can be earning that 4 to 5% on my $100 million. And that's where my profit comes in because the stable coin, Matt coin, is not supposed to go up or down from the dollar. So you're not trading it. You're not making money that way. But that's the way these coins have come to exist in the economic model behind them. So then forget Matt coin, Tether is a real coin and they've got $80 billion. They claim to have $80 billion under their control. So that's $80 billion that they can be putting to work in different yield bearing assets. But the difference now with Glowcoin is, as Jasper, your co-founder partner, was telling me, the average sort of thinking is stablecoin firms make about 2.7% on however much they hold. So in the case of Tether, if it's $80 billion that they control, they're making billions of dollars in profit every year just from that interest income. Whereas in Tether's case, that goes to the company and that's their incentive. What you guys want to do at Glow Dollar is take those, if you could scale to that level or however you scale, you're going to take that interest income and give it entirely to a charity that helps with people who are in extreme poverty.
Yeah, you said it really well. It's a very simple model. The more we generate in adoption, more circulating supply, the bigger the market cap, the more collateral we'll have to invest. And yeah, the important thing is like when we say invest, that collateral is going to be cash and cash equivalents. So part of the like cash equivalents is we don't have to do anything risky. It's 3-month treasuries or less. It's very liquid assets, something that's not going to lose its value. And what I like to emphasize on the nonprofit side, a couple things. For nonprofit, we don't have like the leadership team does not have an incentive to take additional risk with customer assets with that collateral because we're not profiting from that interest income. Whereas for-profit companies might see, oh, it looks like corporate debt is trading for 8% versus US Treasuries of 5%, or there could be a incentive there to take risks and not manage that. So we think just the structure of a nonprofit is a better form of stablecoin issuer in that sense. And then tying a mission to it, if we're not going to take any profit, a big social problem in the world is extreme poverty. Give Directly has a basic income program where you can lift one person out of extreme poverty with $480 per year. And just think like extreme poverty is living under $2.15 a year. Just a little bit amount of money
Oh, a day,
is a
right?
huge
A day.
impact. A day. Sorry.
Yeah.
Sorry. A day. 215 a day. Yeah, just a little bit amount of money has a huge impact on 10% of the population of the world. So scaling to billions of dollars and just providing that as a basic income source of funding, I think is just a really powerful story, plus a really just practically impactful story, not just for crypto, for just like thinking about the way we use money and like, how do I choose to use money? If it's the Patagonia money, that'd be a great way to see it.
Yeah. And Give Directly, what you mentioned, that's the charity that you guys are partnering with, and they have the whole infrastructure in place to get this money. Like they're doing it today with donations, so that's how they're operating. And but the trick that you alluded to here is the solution to getting people out of extreme poverty is pretty well known. It's just you got to give them a basic income of some level that's more than $2.15 a day. It, so the infrastructure to do that and to get that money into the hands of people who need it is there. It's just like, where does the amount of money that's necessary for those, I don't know, what is it, 650 million people, I think, around the world that are in this situation? The
Correct.
amount of the scale there is what's crazy. But that's what you guys hit on, is that if you're looking at the crypto market, and we were talking about Tether with an $80 billion reserves under management, now you're at the scale where you could do some real damage to eradicating extreme poverty.
Yeah, exactly. And the model is very scalable in terms of it's the market for money. There's $20 trillion of money out there. It's like we're just trying to compete in that space. So
20
like the
trillion.
potential
Jeez.
for the potential to make this really big, to like actually talk about solving extreme poverty. Obviously getting to that level is many years down the road, but it's theoretically doable because of the product we're building. Like we can't sell a clothing line to generate that much income because the market isn't big enough in clothing. The market for money is massive. I think there's a lot of potential kind of ability to capture some of this and grow really big. So
And
that's part of the whole story.
yeah, correct me if I'm wrong, but I would imagine the overhead in a stablecoin company is not that big, right? You're not making clothes, you're not buying raw materials or anything like that. Is it pretty lean on that in that sense?
That's a good question. It becomes lean as a percentage of like potential interest income when you get into the billions of dollars of market cap. Starting something, hiring the right people, the compliance, legal, working with financial institutions, because you are handling money, like money is being transacted. That's all pretty expensive. So there is a push for us to fundraise and find support and get like ecosystem partners to help support this project. But once we're at a sustainable level of market cap, it really becomes a very efficient business model. Now, it's always dependent on interest rates too. Like we were just out of a 15-year 0% interest rate environment. That's a huge reason why stablecoins weren't that interesting five
Yeah,
years ago.
you couldn't be doing this in 2010,
Exactly. You'd have many years
2015,
of
whatever. Yeah.
not showing impact and talking about a model that wasn't very scalable. But in the normal interest rate environment, yes, once we get to a lot of traction, like the marginal dollar that you generate in giving is 100 times of like multiplier effect type of impact. So I'm looking forward to sharing that story with foundations and people who donate to different things, because I think it's potentially a big impact. And it's always hard, like you're building a startup and like you don't show that impact right away, but the potential is really there.
Yeah. And also, what I find really interesting is you don't, let's say you don't get to the $80 billion that Tether has, even if you, whatever you do get under your management or however much your treasury holds, that all of that interest income is going to go to help extreme poverty. If I'm a crypto trader and I need a stable coin, I can use Glow Dollar and know that that usage is helping to solve a problem in the world, and it's not just going into somebody's pocket that's created that stable coin.
Yeah, exactly. We estimate it's about $17,800 we're assuming like 2.7% interest on the reserve. But yeah, just holding that amount for 1 year lifts 1% out of extreme poverty. It's not like you're just holding a stable coin. You're not giving away your money. Then us earning 2.7% on that is $480. I think that's a really interesting thing to think about. Oh, if I'm just going to be using stable coins, if it's the equivalent product, hopefully we can become more transparent, more trusted, and all those things. But I really think we'll be there in places, I hope, that the differentiator is our mission and the impact people can have.
Yeah. And you're not just doing this you guys have, it's not just all altruism. You want glow dollars to be used in transactions. You want people to get paid in glow dollars. You want the long-term goal here, as I understand it, is I can use it to pay my bills or to go to the store and get groceries, and then knowing that my usage of it is helping with this poverty issue.
Exactly. Yeah. Wherever money is used, the potential to use a stable coin as just the settlement layer is there. So I'm very ambitious. I'm very optimistic about like blockchain as a settlement layer in a lot of traditional financial products. So all the payment stuff is really interesting and seeing how this scales. But yeah, we're starting with the crypto ecosystem. Like we want to talk to DAOs and DeFi protocols, start using USD Glow wherever you see a USDT or USDC type of denomination. But really, yeah, it's anywhere money works. I hope we're in those conversations because it can be really impactful.
Yeah. Of course, there are hurdles here, and one of them is getting banking partners, especially in the United States right now. There's a bit of a chill, I would say, in the banking world towards crypto companies. How are you finding that? And because that's obviously without those banking partners, without being able to get dollars from banking checking accounts and whatnot into Glow, like that's the on ramp. That's the thing that stablecoins have struggled with in the past, like Tether. And we saw some effects of when Silicon Valley Bank went down, and that had an effect on US dollar coin because some of their reserves were at Silicon Valley Bank. How's that going for you guys? And have you seen do you think that's happening? Are you seeing that kind of change in attitude from the banking folks that you're talking to?
Yeah, truthfully, banks are skeptical of crypto companies, and it's a lot of just the uncertainty in the regulatory environment. What's interesting is once, you know, the banks meet us, get to know us, understand what we're doing, the conversations become pretty easy. It's a nonprofit crypto company is much different than a, I don't know, algorithmic trading margin loan type crypto company or some type of, I don't know, tornado cash type of thing.
Yeah.
So it's really, relationships matter, and we're finding great people to work with in the traditional finance space. So I'm not too worried about that. I am more worried about, you know, we already went through that rough patch over like Signature went down, Silvergate went down, Silicon Valley Bank. Those are kind of like key parts of the infrastructure. I hope we still see like a lot of innovation with traditional finance and adopting crypto and making that a offering they do and a differentiator in this space, because that's just going to help us have the on and off ramp type of services. But yeah, we're kind of, people want to work with us as a nonprofit. They see the mission. They want to associate with what we're doing because it is a narrative changing type of idea. And I think people who are in crypto and like they are serving both the traditional finance and kind of the DeFi world, us being a part of their story when they talk to regulators, when they talk to investors, is something that's, I can tell, has been a useful thing to leverage.
Yeah, for sure. And as someone who's followed this space very closely for many years, it's great to see you guys and with this project that's crypto enabled, that's hoping to do something good for the world. And there's a lot of people in this space who are genuinely hoping to change the world, and they have changed the world. But, there's a bit of more than, say, in traditional finance. I think there's more of this industry are people who want to see things change. And so it's really a breath of fresh air to see you guys with this project. And hopefully it can maybe bring back some of the reputation of crypto that's been pretty much utterly destroyed by everything that happened in 2022. The other hurdle is regulatory, and there's been a lot of talk in Congress about maybe the first area that they want to tackle is stablecoin regulation. Gary Gensler at the SEC is definitely ruffling a lot of feathers with what I would say very broad definitions of what is a security. Is the banking and the regulatory, are those two hurdles the same hurdle, or how do you differentiate them right now with what you guys are seeing?
I think there are two different hurdles. I'm not really, it's interesting. The uncertainty kind of causes more bank issues. So if there was more clarity on the regulatory side, I think banks would be more comfortable working with crypto companies. That's the relationship there. But I'm very optimistic on stablecoin regulation in the US. I know with the SEC and securities and all those things, I think it's concerning, but at the same time, I feel like clarity is coming slowly. And then on Wednesday, I think, wait, is it? Yeah, on Wednesday, the Committee on Financial Services is going to be meeting about the stablecoin regulations. Yeah, and what they initially published was pretty favorable to the type of implementation of stablecoin we're doing and like the safety of the collateral and all those things. So if that's the structure of how things are going to operate in the US, we're like totally aligned with it. And I think then it doesn't become a kind of a gray area for banks to actually work with organizations like us or other types of stablecoin companies and regulated exchanges. Yeah, I'm pretty optimistic about it. I think not sure how fast this will move, but just reducing uncertainty is the key point here.
Yeah. As you deal with Congress and talk to different staff members of congressmen and senators, how's the education level on that end? I know there aren't too many folks in the government right now, elected officials who seem to really get crypto, and there are certainly several that are doing their best to not understand it and to demagogue it. Are you optimistic on that front about with just because you need to understand this, you need to understand how it works and why it's important for for good legislation to be made around it. Are you finding that, or how's that been?
Yeah, so I haven't done a whole lot of work. Like we're not an organization that's going to lobby or anything, but I think my general feeling around it is there has been a lot of learning over the past year. And the good thing about the FTX or like the Terra USD type of big negative events in crypto is people pay attention to it. It's something like, okay, this was a huge problem. And then they start learning about it and figuring out what it is and what the actual problems are. So I think, yeah, I want to be optimistic, but you know, I think there's enough people in those places where they'll make good rules and legislation. It's all dependent on like how strict some of these rules are. I'm optimistic about the stablecoin world. I'm less optimistic about maybe some of the DeFi type of how SEC views different governance protocols or how exchanges, common investors buy like a comp token or Uniswap token. Those are things I'm more worried about. But as for fundamental stablecoin payment tool, kind of that infrastructure, I think we're going to be okay.
Okay. When do you guys think you're going to be able to go live?
Yeah, it's a great question. We're working through a couple partnerships, figuring out the compliance and legal and being really buttoned up there. I think we're very close. We have a great team that's been really hammering this out, really good experience from the industry. I want to be really ambitious. I think within the next month, we can start being more publicly available. Things are pretty much built. We're just getting everything buttoned up with our partners. Yeah, soon. That's an exciting time for us.
Yeah, that must be really exciting after all the work and taking it from a theoretical thing to a practical thing in the world. You must be dying to get to that stage.
Exactly. But there's also, as a nonprofit and building a trust model, we're trying to do it the best way possible. So it's even if things take longer, that's okay. If like people later on will be like, oh, they did it the right way type of thing.
Yeah, thank you for saying that. I wish more teams would take that approach because it's certainly we've seen the other side of that far too often, and I don't like just in a basic kind of security sense of making sure that your code is good and bulletproof. I would love to see more of that. Um, Jeff, this has been fascinating, and I'm really hopeful for what you guys are doing. Just wanted to say one last thing that Jasper said this quote to me that really just blew me away, and I forget about it from time to time, but it is absolutely true. And he said, "Crypto allows us to embed values within money," which I think sums up, why a lot of people have dedicated their lives to this industry and are trying to do things in this new way that hasn't been done before, because values and money have often in the fiat world completely separate. But here, like the incentives that we've talked about and other things can really, there's really barriers that are being broken down. Glow Dollar is definitely, I think, on the forefront of that. So congratulations, and I hope all the best for you. And thank you so much for coming on and talking with me and sharing your story.
Yeah, of course. I really enjoyed it. And thanks for having me on this. I appreciate all the support. And yeah, feel free to reach out anytime with more questions, and looking forward to
Yeah,
next time.
of course. How do people find you and how do they find more about Glow Dollar?
Yeah, best place to start is glowdollar.org. Our website, pretty comprehensive. We have a whole bunch of blog articles about what we're trying to accomplish. We're also on Twitter. So just at Glow Dollar is a good place to find us too. So it's, yeah, the normal places.
All right. Excellent. Jeff, again, thanks so much. It was a pleasure.
Thanks much too. Bye.
That's it for this episode. Thanks for joining us, and don't forget to rate and follow this show on Apple, Spotify, and Amazon Music. Decent People is a production of Decential Media. It is produced by Matt Bogart, with music by Brian Duncan and Kareem Imes.